Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host here, Brent Rasmussen, and today we're going to answer the simple question of, can I borrow more than my house is worth? And the simple answer is no. But really, what are we asking here? How much can we borrow? Or really what question we get very often is, hey, I want to buy a home, but it needs updates, upgrades, repairs. Can I roll those updates and upgrades and repairs into the purchase of my home? And the simple answer is no, you cannot. I know that's tough to hear, and not what we want to hear is that we come to us as lenders to borrow money to do the things that we want to do. But basically, when it comes to loans, it's all a risk versus a reward. And we have, back in the day when I started lending, did loans of second mortgages above the home's worth, up to 125% of the home's worth, and obviously those very much did not perform, meaning people did not make payments on time, and many of those loans went into foreclosure, and those homes were lost, those loans were not paid. So the main question is, can I borrow more than the home's worth? No. Generally, what we're looking at is on most loans, the highest we can get to is about 97% of its value. Meaning if you're a first-time home buyer, or maybe even not, you can put at least the lowest down payment of 3%. And all loans, generally, we look at a percentage based upon the value of the house, whether it's 97, 95, 90, 85, 80. Then we go to 70 or 75 and 60%. So as we're looking at loans, the lower you borrow as a percentage to the home's worth, the cheaper the interest rate generally is going to be. Or you might get some price breaks for cheaper mortgage insurance or things like that. I know many people are looking to extend themselves by saying, hey, I want to refinance my home to finish off my basement. So maybe it's a refinance loan, meaning, hey, I'd like to get $10,000. How much can I borrow against my home? And when it comes to second mortgages, generally speaking, you can borrow up to about 90% of the house's value. Some lenders might go to 95%, but those are very, very challenging to find. Where first mortgages, if you're looking at pulling cash out, are only going to borrow about 80% of the house's value. So as you can see, in order to get cash out of your home, you have to have good equity. We also help many clients that may be going through a divorce situation, and they are told that they must split the equity of their house. And they say, well, I only have $10,000 in equity. My house is worth $200,000 and I owe $190,000. Can I borrow a loan to get my spouse off the loan and then borrow a little bit more to give her that $5,000 that you split in equity? And unfortunately, loans are structured and set up, again, to borrow that percentage. So if we're pulling cash back, we might only be able to borrow 80%. But on certain loans, we can borrow as high as 95%. So again, what we look at is we're never going to borrow 100% of the value of the house. There's always going to be a smaller percentage than that. And we're never going to be able to go over what the house is worth. So many people call and ask, hey, how do I fix my house with paint or the basement or repairs? You can look at doing a personal loan. Personal loans are challenging to come by and get because, again, as a personal loan is, it's not secured to anything. So if it's not secured towards an asset, they can't go get their money back if you choose not to pay. So that's what makes mortgages loans so much cheaper as an interest rate to finance, because there's an asset there, meaning the house, that they can get back if the payments are not made. Similar to vehicle loans. That's why those interest rates are cheaper compared to a credit card or a personal loans, because they can repossess that vehicle, take it from you, and sell that asset if the payments aren't made. So if money is needed, yes, you can look at a personal loan. Second is you can definitely use your credit card. That might not be the best financial situation to put yourself in, but I know many people that do in the short run start to fix up their house slowly, put on their credit card, and pay those amounts off as they go. As long as you don't get out of hand with it and you can slowly do little projects as you go, that I think is the better way to go than putting a $20,000 balance on a credit card with a large payment. Lastly, obviously, is the hardest one for people to take a bite out of is just raw savings. Is in order to fix up your home or fix the things that you want with your house or paying someone off because you need to, is having a savings plan. And last week we chatted a lot about budgets and having that reserve fund established and living within your means, not dealing with instant gratification, but saving money today because something in the future is always going to be needed. And if you have that savings plan, you have options to be able to do what you need to do. So the simple question today is, can I borrow more than your house is worth? No, it's not going to happen. It depends on what kind of loan we do, that we can give you options to get close to 100%, but we're not going to be able to roll in costs on a purchase of improvements. And on refinances, we're going to be a little bit lower limited to the amount we can borrow. I hope you learned a little bit here today. We're always here to help answer any questions, guide you in the best financial knowledge that we possibly can. You can check us out on our website at mtg-specialist.com, or we're only a phone call away at 402-991-5153. We hope you all have a great rest of your day, and we'll see you here soon. Mortgage Specialists. Driven, trusted, reliable.